Welcome to the Wu Blockchain podcast. For the latest blockchain and crypto insights, please subscribe to Wu Blockchain on YouTube and follow us on Twitter. Stay informed and join the conversation. Hi guys, welcome back to our channel. And today we have Leo here with us. Leo is a very senior investment manager in MEXC. Welcome, Leo.
Hello, hi, Yixin.
So,
Great to meet you.
could you introduce yourself, your background, and how you work currently in MEXC?
Yeah, of course. It's great to be here. So I'll talk a little bit about myself and also Maxi investment team. So about myself, I was born and raised in China, and then went to University of Southern California for undergrad in the United States. So I studied math and econ. So after that, I was really I think back then it was around 2013. So in the US, the angel investment, VC investment was getting very, very popular. So I really liked the space, and I got a job in a local VC company. We invested in many traditional companies, like Honey Science. We were lucky to get in the deal in 30 million valuation, and then later it was bought by PayPal. So that was my first 100x investment in my career. So later in around 2017, there was one famous venture capitalist in Union Venture. I read his blog every day. So he was talking about Bitcoin and Ethereum every day. So I was really, really into it and started to read a lot and spend a lot of time on Twitter, and all sort of geek technology um, stuff about Bitcoin and Ethereum. So that's how I got into crypto. And later, around 2020, a friend of mine introduced me to MEXC and start to make investment here. And about our team, so we are a very lean team. We only have about 4 or 5 people making investments. So there are 3 main things we invest. So first of all, we invest in very large OTC deals, meaning that, for example, we invested in TON very heavily in last September, because we were very, very bullish in TON in general and what Telegram can bring to blockchain space. We thought it was the best chance that blockchain can have mass adoption with the help of Telegram. So that's why we bet very big on Telegram. And now we're still looking for more OTC deals. We talk to all kinds of foundations, layer ones, and all the best projects in the field. We hope to empower the projects, help the projects to build, to invest in their ecosystem, and as an exchange, we can do all kinds of activities to help our users to learn more about Telegram, about TON, about all the OTC deals that we do, and bring them to our users. That's the first part. So the second part, we invest in many VC fund in crypto. We invested in Polychain, we invested in Multicoin Fund, Republic. In the East, we invested in 7X and also LSG. So that's the VC fund part. We invested in more than 10 funds in the last cycle. So I have a lot of things to share about these insights later.
Yeah.
And third, we just have like every normal investors, we invest in individual OTC crypto deals like Say, Berachain, BounceBeat. Those are the few deals that we did in the last half year.
Yeah, I do think your experience is very special because you do invest in East and also West. So I think you are the best person to share with us or your opinions on the differences between the Eastern and the Western VCs and maybe the narratives and investment style and the target selection, something like that. Could you share with us more that you observed while you making investment decisions?
Yeah, sure. There's a lot of difference because every time we invest in a fund, we set up a one-on-one meeting for every month. So every month we talk with every fund we invest, what's what they have been investing, their views on the market, how they make decisions. So we talk to them quite frequently. Um, so I would say their investment style and size and team are very different. So I can break it down. So first of all, for teams, I think in the Western funds, they're a very lean team. Um, some big VCs are like Multicoin. They still only have just 7 or 8 people like making investments, and the rest are probably just investment support um, and other to support those venture partners. And I know several other VCs only have very big branding, only have 3 4 people on their team, and they can still make very good investment. And in the East, I think because uh, uh, there's many I think in the East there are many the researchers. Um, the salary is not that high, so they're able to hire lots of researchers, um, team members to they need to do this because they need to scan every sectors. They want to find out who's the best in restaking, who's the best in modular blockchain. So it's I think in the East, VC teams are a lot bigger than the West. And they often and the team also different in a way that in the West, I think a lot of uh, uh, founders of these VCs are all comes from ecosystem. For example, many people from Solana ecosystem start their own fund. People from Aptos start their own fund. So they already have very deep connections. Where in the East, I think a lot of them are pretty generalist. They don't fix into any like ecosystem. They invest here and there and shift with the new narratives. That's very different. And second, I think the size are very different. The West invest would have more concentrated bets. They have, for example, if they have 40, 50 millions in one deal, they can invest in a few millions, 2, 3 millions. Um, so, but in the East, I saw many funds. Um, they have 100 million raised, but they still write checks like 300,000, 500,000, usually 1 million. So they have lots of portfolios in one fund. So I think the West are doing better on this. They have less portfolios, more concentrated bets. Because I guess that's also because of their nature. They have less people um, to do all the post
Most,
investment support. So they really have to, they only have a few people. So they really have to focus on only a few projects that invested that they can support. So they have very limited time availability for their portfolios. I think that's why they tend to have less portfolios. Where in the East, they have many people. They can help their project with listing, marketing, a lot of things. That's also very different. And pretty obvious, the sectors are a little bit different. And in the West, they like new narratives, like new modular blockchain. They like restaking. I remember like the concept of restaking just I think slowly developed in the last a year. Is quite not so long ago. But I see more people understand the importance and more VC have been investing in this field. I think we're in the East, people are many VCs are don't have access to those modular restaking deals. Um, but so they focus a lot on Bitcoin narratives, like Bitcoin layer twos. Most of projects in Bitcoin layer two are Asian founders and Asian VCs. I only saw West VCs starting to come in this year. So that's a lot of difference. I also feel this because um, because the West, the VCs and people have less to build on Bitcoin. They have less Bitcoins on average. And in the West, many people was benefit from early mining, so they have lots of Bitcoins and they care more about Bitcoin ecosystem. I think that's what makes the East have more heavily bet on Bitcoin narrative. So yeah, I think team, size, sectors, that's the main difference I see.
Yeah, I feel like based on what you said, your investment like strategy is more like Western because you are more focused and your team is more like focused on Bitcoin ecosystem and then you don't have that many people on your teams. So I just wondering other than the differences between VCs, do you think the projects I mean the project between East and the West, they are very different because people feel like not only in this cycle, I think the last cycle, people feel like it's very hard for Asian projects to pitch to maybe Western VCs. So what do you think on this?
I think people have different different things they're good at. Um, I think I see a lot of Western entrepreneurs, they come from a research background or PhD, or they already studied cryptographic for many long time. Or they work in Qualcomm, they work in all kinds of traditional um, industries. They already have lots of experience in cryptography. Um, mm, and for example, I really like a new trend called FHE, so fully homogeneous encryption method. Um, I saw Phoenix, the founders already been working in Qualcomm for many years and led this technology um, development for many years. So the FHE technology was already pretty mature in Web2 industries. So once they saw this opportunity, they have very many years of background in the technology background. They know how to implement it in Web3. So right away they can start with very good funding. Many people support it. Very experienced in technology. But in the East, not many people have this kind of expertise. Um, But in the East they have something others that they are good at. For example, they're very good at marketing, very good at in gaming, benefit. They inherited all this advantage from Web2 in Asia, right? Tencent, many gaming giant. There people who work in this companies can easily beat all other uh, people in Web3 native, right? They already have they if you have ever worked in a big company in Asia in gaming, um, their download, their users is hundreds of millions of users, hundreds of million downloads. They have been doing marketings for billions of people. That's so compare with crypto that they have crypto is like nothing for them. It's no right now, even right now, daily active users in crypto is probably just 100,000, a few 100,000 something, like daily active users who really use blockchain every day. So that in the
So
global base,
I think it's not only
yeah.
because the user base, because of wolf culture. Have you ever heard about wolf culture?
With culture, war culture,
Wolf culture. They
wolf
are,
culture.
yeah,
Yeah,
yeah, that's so toxic because they are, I do work at big firms like JD.com for 5 years. So it's
yeah,
like they think they are pack of wolves.
yeah, yeah.
Yeah.
I I understand you.
So so
Yeah,
you
yeah. So they're very good at doing marketings. Like
mm,
if they do some social project, social fi project, they're very good at it. They're very good at doing all kinds of marketings, pulling groups, pulling thousand groups, marketing, referring friends, um, anything about these kind of applications. I think the East people in the East are very good at it.
yeah.
Yeah.
So but I do think for VCs it's not, it's only the only principle should be their returns. So you make money for your LPs, and that's simple like that. So do you feel like I just wonder how your team do due diligence? Like is there any differences in the bull market and the bear market? Do you have different strategies to evaluating projects? Could you share with us that?
Um, there's not much difference in bear or bull market. It's about the same. So we look at the team itself. Does it make sense that this team, this person, this with this background, um, uh, doing this and that? Um, we look at the team a lot. So for example, if the project is building some FHE applications or layer twos, does the background make sense? Have they ever worked in such in this kind of technology? Do they have can they have a good ecosystem? Do they know how the community or how to attract more builders to your layer twos? So we look at relevant experience in the team. Every project have different um, needs to success. For example, if you are building a stablecoin, you don't need attract developers. You need more BD person. Do you have a relationship with all kinds of exchange that can support your stablecoin? Do you have relationship with regulations? Do you have compliance, strong compliance to sustain the stablecoin business? Um, so different projects need different experience. That's one. That's why team is number one thing we look at when we look at projects. It has to make sense. Um, and all others comes after team. We also look at evaluation, of course, and all kinds of metrics. Do they have good amount of users already? Do they have demo projects? Um, and we also look at the sectors. If in 2024 they're still doing some sort of DEX, some sort of AMMs, some sort of L2s that don't have any specific um, advantage, we would just straight up pass. Um, so the sectors, the narratives, what they can do, very important. Well, that's will be we will analyze that according to the trends right now. So yeah, team, sectors, and all else are pretty similar to other VCs.
Yeah, because I do remember I saw one of your interviews that you mentioned that a lot of like projects you make good profits is in the bear market, like you invest in 2023. And
Mm-hmm.
because a lot of my friend doing VCs, I feel like it's really hard to make decisions in the bull market because the valuation is too high. And
Yeah,
if not, it's not a good deal. But if it's the bear market, they don't know if the projects can survive the bear market. So that's
yeah.
very difficult, I feel like. So how can your teams do that?
Um, I think that needs a little bit experience. Because it's my third cycle already since 2017. So I've been watching all kinds of projects up and down. So we made most of our investment in the beer market, and especially in the last year, Q3, Q4, we felt this is so bear market, that no one is investing. Um, and so that's why we feel we need to counter this trend and invest more. We felt I remember in the Q4, market are picking up. We discussed and we decided this is probably the last window we will invest big in terms of timing, because back then was valuation just started to pick up and a few trends like restaking just started to populate. We felt that was the last window we're going to invest big. And in fact, we stick to this strategy. And in this year, we invest very little. This year, we did BounceBit. We did a few other early deals, both all I think under 30 million valuation. So that's our strategy. In the bear market, we invested in Say, we invested in Berachain, and a few and mostly in Ton. So that was the peak fear in last year, mid 2023 to Q3. Um, so sometimes you just have to do this. Um, yeah. And in the bull market, I think right now our strategy is more we more of only investing in early deals, strong founders, and or projects that can last very long, like 3-4 years, or the next narrative. So right now we probably won't just straight up pass. We'll pass NFTs. We'll pass DEX. We'll pass most perp decks. It's already too many competition. We're looking for next narratives that can last to the next cycle.
So
So
how your team evaluate narratives? Because I think the community has a lot of narratives all the times. There are like RGB and very technical narratives and other narratives. So what's your criteria about to evaluate those narratives? Which kind of narratives can last or not?
Uh, we were quite bullish in RGB in the around end of last year. So where after Ordinals went very popular, we look at what Bitcoin can do, what other narratives it can do. It was so Lightning has been there for a few years and no material. There's not much adoption. And we look at RGBs, it was kind of interesting. Um, so it's related to a major narrative like Bitcoin, but it's also kind of niche sector. We weren't very big on this, but we were very big on Ton. We always thought about um, what users can they bring uh, about mass adoption, and we really like Ton because most people use Telegram in crypto and many outside of crypto, so we thought this is very related to mass adoption and have very good potential. Massive users can come in, where we also like FHE. It's the technology in Web2 is pretty mature, and it's the new encryption method. It allows you to compute your encrypted data. So all of it's very related to AI. So we look in the obviously the big narrative for the whole world is AI. So we look, but AI is very general. So we break it down. What in AI can be popular? There are agents. People do uh, model training. People do GPUs. All of this, we choose FHE because allows you to everyone to compute their data, contribute their data safely, and monetize their data. So I remember Sam Altman said, almost all the public data we already have access to and have already trained with wisdom, but private data from private users, they don't have access. So there's huge market, huge need for private data in AI field. Um, so so AI now pretty much becomes a data competition. You have more high quality data, you win. You have uh, you have uh, you have bad data. Like I remember Google when the first Google published its Gemini was if you want it to generate a picture of Elon Musk, it pops off the some random very different from Elon Musk. Yeah. So data itself very important. I think there's three main source of data: public data, where everyone have can buy, or private data, your pictures, my pictures, your house record, your insurance, your many data that only you or some hospital or some private party held. Uh, but you can choose to contribute it safely with FHE, um, without revealing who you are or without revealing the exact data. But AI still can train on this data. So it's very promising, and can I think this narrative can last in the next 3 4 years at least. And third data source is called generative data, generative AI. So AI can actually generate more data for you, fake data, but data that makes sense. So it generates bunch of data according to the existing real data. Um, and then filter out the ones that doesn't make sense. For example, nose. If you generate a face, if a nose is not in the middle part of the face, it does not make sense, right? But still, you can generate lots of new data that to train the AI. So because right now, people need more and more data to train AI, and public data is not enough. Public data is too expensive. So there's a new trend that people use newly generated data by AI to train AI. So this is third data source. I've only saw one project doing this route. So I feel this is very promising, and we're going to keep find more projects building on generative data. So that's how we analyze new narratives. We look at the big trend, okay, AI. We break it down and see what can be bring to crypto.
Yeah, my next question is about the interesting stories, because you have mentioned that you have invested so many projects. You invested Tong and invest Barachain. So is there any impressive events while you're working with them, or interesting stories you can share with our audience?
Yeah, I would say when we invest in and say Barachain, all this have some common characters. The founders are very good at um, uh, marketing and building community. So I remember Say was the major narrative was building a DeFi chain, an order book chain that's native to the blockchain. And back then, all chains are general use and don't have order book. So they just have this simple concept that's very much needed and populate this idea to their community. And they attract a lot of similar users who wants this feature, who think this makes sense. And also for Barachain, the founder is very good at designing good tokenomics to, if you stake more coin, you have more voting power. So be with the people, be with users, what they need, and you will find lots of users that like your idea. Yeah, that's my experience.
Do you find sometimes it's a little bit hard to work with certain founders because they have a very strong personality and they are so different? Because I think one of the most like interesting things working in VCs that you have got to see so many talented young people and to work with them while they doing their startups. So do you feel like it's a challenge, or you think it's it's nothing?
Not so much, not so much. When we invest, most project we invest, we like the founder very much. We make sure we have several meetings, and I also separate. I also let myself think a few days before before investment, to just to let myself um, uh, feel if we really like the team, if it really makes sense, because we invest in we most founders we invest are very powerful, very good entrepreneurs. That's a lot smarter than me, I would say. I would right. I would if they're not smarter than me, I wouldn't invest. So most of the time, they're very, very smart And VCs can get FOMO as well. VCs can get very FOMO in one meeting. Oh, I really like what you build. I really like what you're doing. Let me invest. A VC can get very FOMO. So I let myself rest a few days if I really like this project and founders. Is it a hell yes to invest in this project? So usually by the time we invest, we've always been very like the founders. If it's very hard to, there's I don't remember any case they were really hard with working with them.
Maybe because it's hard to work with, you won't invest. I'm just
Yeah,
yeah,
maybe.
yeah,
Yeah.
because
We also invest in many projects. If one of them is very hard to work with, we probably just carry on. We won't waste so much time on with one founders.
yeah, because there are a rumor like a sentence said that the people always invested the people they like instead of the people they think is competence. I think this is like
Um,
rumors of VCs.
yeah, I understand. I hope I'm not the kind of I hope I don't have that kind of bias. Maybe I have.
Well, I think it's
I try not to have.
totally okay because all the VCs is aimed for long-term relationship. You have to see this guy for the 5 years for the rest of your life. You have got to like him, right?
In crypto, not. In crypto, the relationship just 2, 3 years. You
Oh,
don't have.
well, that's much more
Yeah.
easier. So, well, let's talk about the criticizes about VC tokens.
Yeah.
A
Yeah.
lot of people believe that those tokens are overvalued, that VCs and the project teams themselves earn a lot of money, leaving no like profits for the retail like investors. So do you think that's correct or you don't agree with it?
Um, I understand. I understand why people think about this. But the reality is most VC didn't make much money. They have very long lockup, very long vesting. Say about Binance listed token this year. They only start to list during Launchpad, I remember end of last year or something. So all these projects, the VCs have at least 1 year lockup. And then they have at least 3, 4 years of vesting. So they only start to unlock until later this year and have at least 3 years to um, earn their vesting tokens. So they have not earned much yet. And let alone most VCs investment, if they're not on major exchange, they don't have much liquidity. So mostly not doing so well, the VCs. And second, no one likes low float projects and high FPV. I also buy it on the market. I don't like high FTV deals. Um, I also want to explain how this happened, right? Because the last bear market was very, very hard. So as a founder, when you start raise fund, so this long vesting only start to happen in the last bear market. Before last year, every token, if you get listed, if you have TGE on the day one, investor will get 10%, 20%, 30% of their token and have relatively short vesting, like a half year, 1 year, very short. So There's not so many low FDV projects, low float F projects. It only happened in the last bear markets because it was really bad. No one was buying, so people have to come up with some ways to stop that to sell pressure when the project alive, when the project goes TGE, right? You don't want to have many people cannot many projects they cannot afford to have 30-40% of their tokens vested on day one. So they came up with this 1 year lockup to let the projects go live and develop a little bit, have more tractions, and then slowly vesting the tokens. So it only happens in the last bear market. It meant to make everyone feel better. It meant to make the project have less sell pressure. It meant to the VCs also want this because well, there will be less people selling on day one, which will crash the price. So this is kind of everyone wanted. But later it becomes too much that no VCs benefit from this.
Yeah,
Mostly the project itself.
I agree with you. I agree because I saw a lot of VCs go bankrupt. Is that the right phrase? In the bear market, and they are just died in the last cycle. So I don't think
Yeah.
VCs are make that much money. It's like people I think they are because the risks are equal. So
Yeah.
so
I felt we invested in like 10-ish funds, but I've talked to hundreds of funds. Most of them they have very good return on fund one if they start early in 2018, 2019, 2017. If they start early, their fund is probably 10x. The good ones 50x. But if you're only started in 2021, fund two, it's probably 2x, and not many fund distributed back to LPs. So it's paper valuation. If your fund started from 2022, it's probably just still losing money, still maybe 2x maximum in paper value, and not so much distribution to LPs. That's how I saw those this is the real return, real situation for many funds.
yeah. So my last questions for our today's podcast. I think we need to talk about the meme coins because the topic is really hot right recently. And some investment institutions like A16Z have criticized that the meme coin because some communities believe that meme coins are a way to resist the VCs. So what's your perceptions on meme coins? How do you think people's opinions on this?
I understand why people think this way. I like meme coins. But I'm not an expert on meme coins. So I understand people think both those VC deals don't have real income and meme coins don't have income, don't have real profit. In this way, they are the same. But I want to stress that meme coins is also zero-sum game
Mm.
and very strong survival bias. People you see that makes money, it makes money from you. because it's a zero-sum game. Some people lose money. Most people lose money. Very few people makes money. And eventually people know it will eventually goes to zero. So it's really hard to get in early and sell away, because I've talked to many traders, they make some money initially, but as the price goes higher, they add more. Like no one would invest a lot in early days, right? If you're not insider, if you're not developer or something, no one invests a lot in early stage of meme coin. People buy a small amount at first and add more along the way. So as the price goes higher, you add more. A small drawdown, a small decrease in price make you lose more money, eat all of your profit that you made in your early buys. That's the reality that I know after talking to so many traders and also myself. So I remember one time Solana meme coins was so popular, I cannot resist to use some TG bots to buy some meme coins. I was so FOMO to do it. I remember Boomi or several Slurf, many meme coins. But after a few trade, I was down 50%. So that immediately cured my FOMO. I'm no longer FOMO about all these meme coins because I understand how they work. And I felt very shame about myself. I did not do well. I was down so much. Even I've been working in VC for so many years. I was down so bad. I feel shame. I don't want to tell other people. So immediately I got the feeling, if you lose, you won't talk about it on Twitter or you talk to your friends. You only post a Twitter. You only tell your friends if you make money. You you say, oh, I made 200%. I made 300%. In reality, that's might be a few $100s. But when you lose money, you lose 50,000. You lose 100,000. You don't tell anyone. So you only see people making money. You only see people post Twitters that made this get rich quick game. You post your P&Ls on Twitter. You made 200%, 300% in one day. But in reality, you have to face yourself. Did you really make money? Did you? Everyone knows it's going to zero. Are you going to stay with it? In the reality, most people lose money. So I'm no longer FOMO in the meme coins. Yeah, maybe just play for fun, not too serious about it.
Well, I think personally, I feel like meme coin is like it's like a culture, something like culture. So I think the only use value of meme coin is because it can scale up the user base for crypto because it's easy to comprehensive. It's not complicated, and people who from Web 2, when they want to try some new things in Web 3, maybe they can buy meme coin. That's just my personal idea. So yeah, I don't believe it has actually value. So yeah.
Yeah,
Oh,
just
yeah, just a culture stuff, just a popularity stuff. So
yeah.
I think that's enough for today's podcast. And I think we talk about a lot of interesting stories and you share with us your insights. So thank you, Leo, for coming and join us. And I hope that your investment this year can have a really good like revenue. So thank you for your time.
Thank you so much.
Yeah, thank you for your
Thank you
time.
for inviting me.
Next time. Bye bye.
Yeah, thank you. Bye bye. Great to be here. Bye bye.